Wondering if you should use Rule 72T with your Roth IRA? Hi, I'm Jared with Carlin Financial Group. For the best retirement information and to help make sure you don't outlive your money, be sure to subscribe to our channel and click the bell so you won't miss out on any of our new videos. Today I wanted to address a question that was posed on our video explaining how penalty-free early IRA distributions work using Rule 72T. The question comes from Lou, who says he's currently 55 and wants to know if he can access funds from his Roth IRA using Rule 72T to avoid any excise tax before he turns 59 and a half. Well, for you, Lou, and others out there who may be in a similar situation, there are a few things I'd like to address. Firstly, let's talk timing. Since Lou is already 55, it's always a good idea to explore what other potential income alternatives he may have. I say that because remember, Rule 72T is pretty inflexible, and one of the caveats of using that rule is that you must take 72T distributions for a minimum of 5 years from the date of the first payment. This means that you would be required to maintain the 72T distribution schedule beyond age 59 and a half. If you had not elected 72T payments, then you're afforded much more flexibility once you reach 59 and a half, as you can then take out as much or as little of your retirement accounts as you want. On the flip side of the timing discussion, it's also important to be cautious about starting 72T payments too young, as you'll likely not have as much saved, and you still have to contend with market conditions along the way while continuing to make withdrawals. Now, this scenario could leave you in a situation where you'll not only be receiving a limited amount of income from the 72T distributions, but it could also lead you to not having nearly enough money left to continue and sustain you throughout your retirement years. Secondly, let's talk Roth IRAs specifically. Typically speaking, most people utilize Roth IRAs because they're looking for a tax-free source of money in retirement. So avoiding any unnecessary taxation would be of paramount importance to most of us utilizing this savings vehicle. That said, especially if you're close to age 59 and a half, there may be very little reason to consider utilizing Rule 72T with a Roth IRA. The reason I say that is because normally, the only portion of a Roth IRA that could be subject to taxation or penalty would be the growth or earnings in the account. You could be taxed and penalized on the growth if you're trying to take that portion out before age 59 and a half or before your Roth IRA has been established for 5 years, even if you have reached 59 and a half. Now, there are some exceptions that would allow you to access that portion of the money without taxes and penalty, and we discussed that in another video, but here we're talking specifically about taking the money out to supplement income and not for those exceptions. Generally speaking, you can have access to some of your Roth savings and avoid those taxes entirely if you simply follow the rules. Roth IRA distribution rules state that distributions from a Roth IRA are always treated as consisting first of contributions, then converted amounts, and finally any earnings. What that means is you can always have penalty-free access to any contributions you've made to the account, since your tax liability on that money has already been satisfied. In addition, if you've met the 5-year rule on any conversions, meaning any amount that you've converted has been held in the IRA for at least 5 years, you can also access that portion of your money before tapping into the growth. Now note that if a conversion is less than 5 years old, that amount could be subject to penalty, and so you'd likely want to be sure you aren't dipping into that early. Basically, what we're saying is that for Lou or others who have a Roth IRA and may have retired early but need some additional income before reaching 59 and a half, you could potentially withdraw a fairly significant portion of your Roth IRA funds early without ever touching the growth, and therefore avoiding any taxation or penalization, as well as any need to entangle yourself with the restrictions and added rules of using 72T payout. So Lou, perhaps you should explore this option with your Roth IRA and don't give yourself the added headache of restrictions and trying to structure 72T payments. If anyone's got more questions, we'd love to answer them for you in a future video. Just drop us a line down below in the comments. If you'd like our help determining how best to fill the income gap created by your early retirement, you can learn more about working with us and apply to become a client using the link down in the description. Thanks for sharing some time with me today, and please share this video with someone that might find it useful. Give it a like, and remember to subscribe to our channel and hit the bell so you won't miss out on any future tips. As always, live today, plan for tomorrow.